everyone, K Kim here. Today's May 18, 2018, Friday. I hope you guys had a good week trading this week. Welcome to the market update. Again, my name is K Kim with the Traders Club. Let's keep things simple and succinct today. We're going to be looking at Spider, IWM, and XLF, and we'll call it a day. Let's start with the Spider here real quick, just to follow up from last Friday, which was what, 11th, right? So the 11th was on that day here. Not a whole lot happened here. Good news is this gap right here. We talked about this gap last Friday. This gap, we wanted to see buyers filling this gap. Buyers been filling a lot of these gaps here. That's a good sign. We still have these two gaps remaining here. Those are downside selling pressure gaps. So a lot of times when these downside gaps are open, the buyer's objective is to go up there and fill it. And we've been following gaps for weeks now, that once the gap gets filled, many times it becomes instant resistance. So you can see that that gap was filled on this day, which was May 11. And then you can see that we gapped down next day. And we did open the bearish gap, which was filled yesterday. But really though, this gap was important to fill because it has been open it has been open for a while here compared to this just gap that it was open on Tuesday, or when was this? 15, so 3 days ago. So both of these, that gap is filled now. That's a good sign. So now as far as the prolonged gaps is concerned, we got this gap and these two gaps that needs to be filled so that buyers can kill this downside selling pressure here. Right now, currently though, which we've been following for a while now, this island reversal gap, right? You see the gap down and gap up. So this thing is now island bottom, right? What the buyers want to see this island bottom alive, right? Continue to put pressure on the bears, continue to have that momentum going. So I think buyers been doing well here this week. You can see that we have formed what it looks like a bull pennant pattern like this here. So you can see that bull pennant pattern when it comes to technical analysis book, that's what they call bullish continuation pattern, right? But what I would say is that it's a really 50-50. I guess I would say 55% to the upside, 45% chance to the downside, just because we're staying above this neckline, right? You can also call this a double bottom, and this is a neckline, and we're forming this bull pennant pattern above the neckline. It's always good to see the pennant pattern forming above the prior resistance level, so we can see this is acting as potential new support. And in that vicinity, we're also staying above this island reversal gap as well. So that's why I think there's a little bit higher chance it can break out to the upside. But again, these short-term patterns, you never want to trust them fully because you never know. They can either break out to the upside, or it could break down to the downside, or it could look like it's going to break upside and then just fails, come back downside. This is one of the reasons why I do not focus on the short-term time frame patterns, right? So it's much better to kind of focus on the longer term time frame, but like shorter term time frame like this, it can go either way. But for the fact that we're staying above the neckline here, prior resistance, new support, and we've broken out of the neckline, we have island reversal in place, and we got this gap remaining open. So I think that gives the buyers a little bit more edgy here in the short term. So if we can able to break out of this and continue on, I think the next stop for the buyers will be this level here. That is the very important prior resistance, which is 280 level, right? 280, which is coinciding with this gap area. What the buyers want to see, get up here, fill these two gaps, kill the downside pressure. And then what do we say? What have we been saying? We said that once the gap gets filled, it does act as instant resistance. So we're probably going to see some kind of a turbulence there once that gap gets filled, and we're probably going to see a pullback. As of now, as of today, we are still in the vicinity of lower high, meaning this is high, lower high, and that's still a lower high until we see buyers bring this thing back up and make this into an equal high. We're still in the risk of potentially this becoming a continuation of a downtrend. However, because the buyers have based out here for so long, right? You can see the base. And what is the definition of downtrend? It's lower highs and lower lows. Definitely we don't have a downtrend, right? Because we do have lower highs, right, as of now, but we do not have a lower lows. That's the problem for the bears, because we actually have higher low. You see this? That low is higher than this, so that's the problem. This is why we're not in a downtrend. We're not in a bear market. We were not in bear market in 2015 and 2016. We're not in a bear market here today in May of 2018, right? 2015, 2016 was a consolidational phase. We were not in a bear market. Most people who focus so much on the short term, they are the one usually say, well, we're in a bear market. You know, S&P 500 has been bear market since February or late January, because they look at things much smaller time frame. We're not in a bear market. We cannot even classify this as a bearish downtrend because we don't have lower lows. We only have lower highs, right? So buyers have found a lot of momentum here, which we've been talking about, and build base here. That's a good sign here, right? 200 SMA still rising here. Another good sign is that you can see that since this downturn, since that downturn, this is the first time you can see that 50. Do you see this? That 50 and the 20 is crossing back up to the upside. That's the first time since this downturn, right? You saw that bearish cross right there, right? 20, 50 crossing to the downside. Well, for the first time now, 20, 50 is a crossing to the upside. What does that mean? It means the minor to intermediate term perspective, minor to intermediate term momentum is shifting to the bullish, right? A lot of people are still scared of this market. A lot of bears who's been calling for a crash in 2015, 2016. They've been calling for a crash in 2017. They're here today still calling for a crash or quote unquote bear market. It's because once the bears are bearish in the market, if they thought the market was too high in 2016, well, it's already up too high in 2017. And if they thought that, think about this. If the market was overvalued, right? We're in such a highest valuation, right? So they thought that 2016 was, we're in a high valuation, right? If the market was too high in 2016, well, market is way too high in 2017. Well, if they thought the market was high in 2017, well, they're gonna for sure think the market is too high in 2018. I'm not talking about this correction, guys. I'm talking about these guys are chanting crash or bear market. The sad part about these guys is that they did not able to participate in this bull move. They did not able to make money on this bull run since 2016. What happened was, if they are so convinced that the market is up too much, right? It cannot possibly go any higher, then they're going to proceed with their short positions, right? And then they lose money as the market continues higher, right? But they continue to see that, well, if it was too high in 2016 and 15, it's too high in 2017. So they continue short and they continue to get burned. And they say, well, finally, we're in 2018. So now if it was too high in 2016 and 2017, of course, it's way too high in 2018, right? So this is kind of what happens here. A lot of these bears, most of these guys are there very, very scared, right? They're scared of this bear move. They have not made any money. They were not able to participate. So it is a human psychology for somebody, when everybody's making money, when a lot of people are making money, and he the bear feels as though he didn't make any money, he wants this thing to crash. He'll feel better then because, well, he didn't make any money, he wasn't able to participate. I'm talking about the bears, right? Who's been calling for a crash for a couple years now. Well, he was not able to participate in this kind of move. He will feel, because this bear or the bears were not able to participate in it and not able to profit from it, but rather lost money shorting it, they really hate this market. So they really want this bear market to crash. They want to see longs to suffer. It is psychological way of human beings deal with things. A lot of times these bears feel that way because they were not able to participate, right? If you've been following me since last couple years, you know that I've been full on bullish since 2016 May or June or so, right? And so somebody like me who's been participating in 2016, that bullish run, and I was able to full on ride this move since 2017 all the way to this up. Not only that, I was able to get into some VIX calls and I was able to participate in this. It's just that the people who do, the buyers, the bulls, the smart bulls who has been able to ride this thing higher. I mean, I had the best year in 2017. Once things work out for them, they continue to stay in the trend. They respect the trend, right? There's no personal agenda or there's no anger against the market. It's not a personal issue. You see what I'm saying? This is one of the main reasons why bulls who's been participating in this move since 2016, who's been making money on this move since 2016 and 2017, they seem to be more calm and cool, and they tend to able to, not be emotionally swept away, not be fearful of the market. But when they see the, pretty significant dip like this, they will be buying the dip. That's what you call smart money. Smart money usually get in there before anybody else, right? I consider myself a smart money. I'm not trying to be arrogant or anything like that. But that's how I trade. I don't trade when things are going up. When things are going up, when public start to participate, I get out, right? That's how smart money works, right? Smart money get in before the move. And then once we start to see that institutions start to get into the move and then, makes that move, thrive higher, and then you get the public participation, right? Public always comes in late. Retail traders always comes in late. See, a lot of smart money's already been buying these dips. Not only they're buying, maybe they're buying some calls options, or they also buying up shares in individual equities, right? And then what happens is there will be, they wait until institutions start to get into this market. When the institution comes, that's when you see a strong breakout, right? Strong breakout. And then what happens is this makes a new all-time high. That's when the retail trader comes in. That's what we call public participation, right? Public always comes in late. And then once this thing starts to get up here and gets extended, right? I start to close out some of my positions when the chasers start to chase this up move. And it recycles over and over and over again. That's what you call uptrend. Primary term uptrend. That's why bears continue to get burned, and chasers, market always brutally punishes chasers. You see what I'm saying? Something that I've been talking about for months now is that you want to be greedy when others are fearful. Something that I've been talking about on this move here, you want to be fearful when others are greedy. So this is a level that you want to be fearful when others are greedy. This is a level when others are fearful. That's when you want to be greedy. Do you see it? Right? And most people have this kind of, they heard these things. Everything that I told you today in this video, it's not the first time that you heard it. It's just when the market starts shaking and baking, man, there's fear and it's hard to react upon what you've learned, right? This is a reason why doing it is the hardest thing, not preaching it, not telling people what to do. That's the one thing that I realized, man. All these Twitter people, they'll tell everybody, their followers, what they should be doing, but they will never practice it. This is a reason why I have a journal post, right? So you can see my trades, as you know what I mean, with the ongoing updates, because I practice what I preach. You know what, guys? You know, the easiest thing for me to do is come out on these videos and just give you these levels. Like, okay, we got a bull pennant here, we got some Fibonacci here, we got rising uptrend support here, we got downtrend resistance there, we got the island reversal. That's the easiest thing, because I'm just telling you what I see. The hardest thing is, well, where would you go long? How long would you hold? There's some volatility. Would you hold through that? Where's your target? Where would you add? See, that's the hardest part. It's not about just, you know, giving you these levels or telling you, okay, above here's bullish, above down here bearish. That's what most people do. Above here's bullish, down here's bearish, right? That kind of crap doesn't work, right? This is a reason why it's easier to tell people what to do versus you actually live in it, practice in it. I want you to understand that, guys. So once you go out there and you're following these people, it is the easiest thing to do to a video, or you know, they'll some of these people, they'll like, you know, post a chart and they tell you, I called it, I told you so, and go ahead and ask them, like, where did you go long? They'll say, oh, nah, man, I didn't get into it. I nailed it, but yeah, I didn't get into it. I didn't get any positions. I just saw it. You know what I'm saying? Like, a lot of people will tell you that they never got into it. They'll be like, oh yeah, man, I nailed it. I told you so. Most people are like that. Most people don't know what they're doing. It's because of that, because they just playing with their crayons and their screen snapshot application, right? And they just trying to act like they know something, right? Like I said, guys, hardest thing is, where should I enter? How long to hold? Where's your expected target price? Where to add? And when the volatility hits, what should I do? Should I get out? Should I hold through? See, that's the hardest thing in trading. Not me telling you like, okay, we got the here, there, we got that, we got light. You know what I'm saying? This is a reason why I do journal posts, because you can learn so much more from me doing that than me just giving you these market update videos. You know what I'm saying? So I hope you guys understand that aspect. What you want to cultivate as a trader and investor is not you want to be right or wrong or looking at these things. What you want to cultivate is, okay, this is where I want to go long, and this is my target, and if this happens, I want to add more here, but if there's some shenanigan happens, where am I going to get out and take the loss, or I'm going to hold through, I'm going to add more. See, that's what you should be cultivating. So, you know what I'm saying? And keep refining that skill. Keep refining that skill. You see what I'm saying? It's easy to just say above here is bullish, you know, down here bearish. But we all know shenanigans going to come down, take your stop, and goes right back up. Stuff like this happen all the time. This is something many people do not understand. That's the funny part. That's the reason why none of the people that you follow will ever give you real-time entries and exits. I've never seen anybody do that. Right? Nobody ever do that. They got so much to tell you about technical analysis and chart patterns and moving averages, but not one time these quote-unquote gurus and experts will never give you where they're going to enter and where they're going to exit. Never. Isn't that interesting? Because once they do that, they will be exposed. The market will expose them. That's why. That's the reason why. Let's go to IWM. And again, looking at Spider here, we want to see this gap remains open, right? Let's see if we can do that. Again, if it does get filled, it's not the end of the world. That's why I put some Fibonacci here. So if we do see this thing breaking to the downside, we want to see, you know, maybe 268, 266, kind of 264 area to hold as a Fibonacci retracement zone, and then possibly kind of getting into the higher low again. But we'll follow up next week and see how that plays out. Russell 2000 obviously made new all-time here, finally broken out of this kind of a multi-month consolidation phase. Do you think that we're on a downtrend? Does this look like that we're in a bear market? We are not in a bear market, guys. It is very basic. Downtrend definition is lower highs and lower lows. Where is lower low? There is no lower low. It's higher lows. That's it. Higher lows. There was no lower lows because this is the reason why most people don't understand what bear market is. You know what I mean? We were not in a bear market. We were in a consolidational phase, as you can see right here, prior resistance, higher lows, and we are consolidating. What is consolidating? Well, it's kind of like a digestion. A lot of people like to call it digestion when the market makes a big move. It likes to digest that gain because when the market gets this move here, again, this is what happens. Russell 2000, you guys see what happened here. You guys know how I ferociously start buying these dips here pretty much all year long. That's smart money. Smart money get into it before the run. And then once this happens, that's when institutions start coming in. And then the chasers gets burned. And then the public participation up here, things get a little bit rocky. You see what I'm saying? Smart money always gets into it before the move here. So right now you can kind of see that maybe some institutions are supporting here. Some buying pressure, momentum that we can see here. So I've been buying Russell 2000. I've been buying these dips. I know I didn't journal this one on the Russell. I did it last year, not this one. I'm journaling Diamond and the Qs. But I've been buying these dips on the Russell 2000 actually, and I'm still holding full here. My target is up here, 170, 175 or so. I mean, obviously it's not going straight up, but like I said, smart money always get into it before anybody else. And then you see some institutional move, bring this thing up, and then you're gonna see public participation always coming in late. Do you know why? Because the retail traders are still scared. Well, what if it's poking its head up? You know what I'm saying? Make a new all-time high, and then it's gonna be a classic bull trap, and bring it down. We're gonna have a crash. That's what most retail traders think. They're scared all the time, right? This is why the public participation is not going to be until this thing gets to about 166, 167. That's when we're going to see public participation coming in. And when the public starts getting in, what do you think is going to happen? Well, it's going to start to get a little bit volatile. That's when you think it's going to get volatile. So Russell 2000 looking very good here. So you want to focus on the cultivation. You see cultivation. What's a cultivation? Well, that's higher low. That's a cultivation. That's a fact. I'm not making this up. When people say, well, that's a bull trap, they're making it up. That's not a fact. That could happen, but that's simply not a fact. But when I say we have a cultivation of higher lows, that's a fact. You see what I'm saying? When you do your technical analysis, you always want to do your technical analysis based upon the data that is already there at hand. Right? Not with the ghost data, not with the data that is not there, not make crap up. But you always want to do your analysis upon the tangible data that is at hand, which is this, a cultivation we have broken out. That's what you call higher high. Are we in an uptrend now? Yes, we are coming out of consolidation phase. What is the definition of uptrend? Higher highs and higher lows. So if we look at this as equal highs, and if you look at that as higher high, and if you look at this as higher low, do we have a characteristic? Yes, higher highs and higher lows. We are in an uptrend. You see what I'm saying? But again, like I said, most retail traders are scared. So they don't want to go in until we start to see some much bigger move. But once you start getting into it, when it gets 170, it's too late. XLF, I'll let you guys go with this. XLF, you guys remember I recently wrote an article called I think the banks have bottomed with a bullish divergence on daily chart. This was on this day, I think May 4th or May 3rd or something like that. And then we saw that move, and we can see that we're trying to retest the neckline right here, right? So we have a little bit of bull flag here as well, but like I said, I don't pay too much attention to short-term flagging or short-term consolidation or some kind of a pennant pattern, because like I said, technical analysis book says this is a bullish continuation pattern. But when you focus so much on the short-term patterns, because it could very well break out to the upside or break down to the downside. I mean, in my statistical memory, it is really 50-50. But because we have a pretty good momentum here, you can see that this momentum is a pretty big, not big, but it has a pretty good solid momentum to the upside. I think I can give that 55% going up. 45% to the downside. If we do see a fallback, you can see that I put some Fibonacci here. So those are the levels that you want to see hold. So can maybe do something like that. If we do something like that, that could potentially be an inverted head and shoulders. But right now, bulls are winning this game, not just on Spider, but on the indices. I mean, obviously, there's still a lot of levels that it needs to conquer. But as I go through all the major indices, as I do all this long-term analysis, buyers are starting to gain momentum here, right? And so what's going to happen is, and I'll let you guys go with this, what's going to happen is we're going to see market as it starts to make a move, and when the bear starts to make a move, it's gonna be like a smaller move, right? It's gonna be it's not gonna be a big price range. So we're gonna have like these tiny moves, maybe tiny gap ups or something like that. And then what's gonna happen is a bear is gonna bring it down, maybe a big gap down, maybe a 1 day like 1.5% decline, just scaring the hell out of everybody. And then most bears gonna start adding to their short, thinking that this is it. And then what's gonna happen is bull's gonna bring it up. But when the bulls come back and reverses it, it's not gonna be like a big move. It's gonna be like a tiny move. And that's how the market slowly kills the bears, right? That's the market how slowly kills the bears. Because when the bulls reverse it back up after a decline like this, it's not going to be a huge reversal. Like even here, it was a big reversal because it's really emotional. But when the market starts to stabilize, right, back to the upside, resuming back up to its primary term uptrend after this kind of correction, what happens is once it stabilizes itself, or first signal of that the market is stabilizing, you start to see these tiny candles. You see that? Tiny candles. And it's going to happen throughout. You're going to see these tiny candles. Maybe one big day, but tiny candles. But when the bears come, they're going to bring it down. But what bears going to start to realize every time when there's a big gap down or big, downside move, bulls gonna come back, reverses it up, but when the bulls reverse it back up, it's never gonna be like 2% move or 1.5% move. It's gonna be a tiny move, right? And it's gonna just really irritate the hell out of the bears. And that's how market reverses from a correction. So expect something like that to happen. Shenanigan is gonna happen. Some unknown gap down is going to happen. Some 1%, 1.5% decline is going to happen. When that happens, I would have to say that that's a good time to buy, right? And then when the bulls bring it back up, it's never going to be a big candle. I mean, yeah, you could have a 1 day or so, but usually it's going to be a tiny candle, little tiny gap ups, and just taking weeks to make its move way up. And that's going to really exacerbate bear spirit, and they're gonna, because it's moving such a slow manner, they're gonna think there's like a bear flag, and they're gonna start to add to that short. And what's gonna happen is the market is gonna continue to grind higher, inch higher until it gets to a new all-time high and break out. And that's probably how it's going to move. And that's how the market a lot of times stabilize, right? So we'll follow up next week, and we'll go from there. You guys have a wonderful weekend, and good luck trading next week.